Hi everyone, welcome to another Learn, Grow, Invest meeting. It's good to see you. All right, so we are going to be talking about, we're going to be doing a full stock analysis and review today from scratch. And what that means is that we're going to do a quick poll. We're going to ask you to pick the stock that we're going to review, and we're going to, go through the annual report, go through the financials, go through a little bit of qualitative analysis, and then at the end we'll say whether or not we would invest in this company or not. It should be extremely fun. If you're brand new to picking stocks, this may be helpful for you. And so let's just get right into it. So Lord, we thank you so much for this day. We pray that you will make this time fun, informative. We pray that you'll give us knowledge and wisdom to be better investors. We pray that you'll show us how to use our time to help others in Jesus' name.
Amen.
Amen. All right, guys. So I'm going to post the link in the chat right now. Welcome, everyone. Good to see you all. So we're going to ask you to click on that link and vote. Tell us, write the stock ticker for the stock you want to pick. We're going to bring it up on screen right now. So
there's another way to do this, guys. You see the QR code on screen. You can scan it and it will take you right to the poll. Or you can go to slido.com and enter that code and enter your pick.
Yeah.
So the plan is that we'll be using the JC site, jamstockx.com.
Yeah, but I mean, I'm already seeing Square, that's an interesting pick. Hey, let's see what everybody votes for. But guys, just go ahead, select the stock, and then let's see how it goes. But we're just gonna be going through the process that we did over the past few weeks. So go ahead and place your votes quickly. We want to get that part out of the way because we're gonna end the session in exactly 1 hour. So, go ahead and place your votes right now.
Yeah, so it's a really quick analysis, right? And I'm kind of here as the test subject, as the guinea pig, because though I am an investor, I do not follow the market every day.
Not at all.
I'm not the one who will have all the information on all the stocks.
Yeah.
I'm not that person. I'm more of what I like to call a common sense investor. So yes, I do research, but I may not do all of the technical and the analytics and all
nothing.
of that. I don't work that way.
All right. So the idea behind that is if we can go through and she can hear enough to understand whether or not she would, want to look at that company further or not. That's the goal. So if you've never heard about the company before, you should be able to go through these steps that we're going to show you and determine whether or not that company's worth investing in or not. So guys, we're going to leave the poll open for another minute. I'm not seeing anything standing out really. So please, keep voting. We want to be able to determine which one we're going to review. So
yes, and you can vote more than once.
Yes, you can vote more than once.
Let's try keeping it within the JSE.
Yes, please. At least for now.
Yes, because that's what we have ready access to in terms of company information and the numbers.
Yes. Okay, so Indies. Yeah, we're gonna choose Indies. That's it.
All right,
cool. So yes, Orville, we're gonna have to do it in 1 hour because we're trying to give persons
quick analysis.
Yeah, because we just want you to see that you can get enough information. You're not gonna be an expert in an hour, but you'll see enough where you can determine whether or not it makes sense to take a further look. So that's the idea. So guys, we also have a guest in the background that you may hear from time to time. So that's our son saying hi. Right? So, all right. So the pick is Indies. All right, cool. So let me just prepare.
So while Jermaine is doing that, it's just a reminder. So the last 2 meetings, Jermaine would have, or last 3 meetings, Jermaine would have been talking about fundamental fundamental analysis, and we will be applying what he would have gone through in those sessions to Indies, since that's the stock that we have picked here today, that you have picked here today. We'll be going through those steps with Indies and see what the outcome is.
Okay. Yeah, so these are the steps that we're going to take today. So the first thing we're going to do, we're going to go to the JSC and look at the last annual report. What we're trying to understand about Indies is their business model. So hopefully on the first page, it should tell us what line of business they're in, how they make their money. We're trying to get enough information to understand the business model. Next, we're going to review the management discussion and analysis, see if there's anything key there. And we're going to look at the financials and the ratios as well. Then we're going to take a look at the last quarter. So we're going to see their last financials that might have been posted, you know, what it says about them. Are they trending in the right direction from the last annual report? Those are the things we're going to try and determine. We're going to look at the industry, try to understand, you know, what the landscape for Indies look like. Are there any competitors that we need to be aware of, you know, things like that. Then we're going to try and understand what are the key drivers, what things will impact Indies price. And so that's pretty much what we're going to be doing in 45 minutes. All right. So Ashley, thank you for that reminder.
Indeed.
Just note, we are not financial advisors. This is for educational purposes. This is for fun. This is for learning. So anything that is said here is not to be taken as financial advice. And so please speak to a licensed financial advisor before making any financial decisions. Thank you. All right. So let us go to the JSC. Let me actually share that as well so persons see me doing it. All right. So we actually had it on Wisynco from our last session. So let's search for Indies.
There we go.
So we're just gonna see some basic information about Indies Pharma. So I'm gonna assume that I know nothing about this company. All right. So we're seeing, let me go for the last 6 months. So we're seeing just, so when we go to the market data page on the JSC, we typically see a list of pages for the company on the right. We see their chart, we see a line chart, we see a candlestick chart, and we see some stats about the company here below. So a few key things you may want to look at: what the last 52 weeks, what the price has been. You know, the number of shares outstanding is always good to know. And typically I look at, you know, the year to date as well. So it's been up 43% year to date. We see that within the last year, it has been as high as $4.90. And today it closed at $3.80. All right. So let's go straight to the annual report. And this was released in February 2021. Let's open it and have a look. All right.
So let's enlarge that. Yeah. So this also serves as a reminder of what is available on the Jamaica Stock Exchange website. The information that you need to do your analysis is right there.
Yeah. All right. So let's go. You know, forgive us for skipping through pages that we don't think are relevant. We're trying to do this
in 45
minutes. All right. So we're seeing, you know, pills here. So we're gathering. If you know nothing about Indies, you'd say they're either a medical company or a pharmaceutical company. We see Indies Pharma. So let's assume that they're pharmaceutical.
Yes.
So we're going first straight to the company. We want to understand what the company does. All right. So it's saying the company was headquartered in the commercial complex in Freeport, Montego Bay. Its retail unit, Trident Pharmacy business, is located nearby in Sam Sharp Square. I'm gonna scan through until something tells me what they do. The company distributes over 150 prescription and non-prescription or over-the-counter generic pharmaceutical products for BioPrist Holdings Limited. All right, so that's a key name that we want to know. All right, so let's just take note of that name, right? All right, on the BioPrist Pharmaceuticals brand, in addition to the new line of products being sold on the orthopedic and joint rehabilitation segment. So pretty much they're in pharmaceuticals. That's their line of business. That's how they make money. All right. So let's see if there's anything else we can understand about them. So the company currently services customers across 14 parishes on the island. So it seems to be focused on Jamaica, including over 400 pharmacies. So they have over 400 customers in this case being the pharmacies, private and public hospitals, and government agencies, including the National Health Fund. So they have, I mean, a good size, customer base for what they do.
And I think don't skip that they also supply medical practitioners and individual end users. So
Yeah.
it's not only distribution, not only bulk distribution, but they also do individual.
Yeah, that's actually worth noting as well. Thanks. All right. So it also aims to be the leading and trusted pharmaceutical distribution company with strong customer relationships, a commitment to brand and product development, and a large and reliable distribution network. So what this is saying to me, they're focused on brand and product development, meaning they're going to be trying to incorporate new products all the time. They want to build and grow strong relationships with their customers, and they want a large and reliable distribution network. Now, sometimes these things are just for marketing, but it tells you what the company's intent is, right? It's telling you what their focus is.
And it also tells you what to look for in their financials, because if they're saying that they're interested in product development, then we need to look at their R&D. What does their research and development line look like in their financials? Are they actually investing in this, or is it just fluff?
Yeah, so the money that they're spending should align with what they say is their vision and their mission, all right? So it says the company continues to be managed by its founding members and newly appointed non-executive directors. That's okay, that's good to note. All right, caring for the nation's health, their vision, making medicines available and affordable for everyone, and creating stable employment opportunities in Jamaica. All right, good to know. There are times when you may want to focus on the objectives. I mean, those are good to know as well. They may give you some key insights into the company. All right, does anything stand out for you there that you probably want to highlight?
Not at this juncture. I think it's just important to read it and understand it to get an appreciation of who they are as a company.
Yeah.
What it is that they want to be, what's their corporate image, and is it actually a company that you align with, that your values align with, that you're comfortable saying, I want to invest in this company.
And that's actually important, because that's something Renee and I believe in. We focus on companies that we believe in. So if their philosophy, their approach, their strategies don't align, we typically don't go any further from there.
Right.
All right. So let's go through. Mission statement is probably the last thing we'll read before we go to the MD&A. So to bring something meaningful and good to this blessed nation in its entirety in the fields of healthcare by sourcing medicines of the highest quality and efficacy and economy. I mean, I'm just going to keep scrolling. That's the org structure. We're trying to do this in 45 minutes, okay? All right, founder and chairman. Okay. All right, so let's see what this says. All right. Where does it start? As a million. Starts from over here. Okay, cool. So this is something that we'll definitely want to see. All right. So during this year, like everybody, we've had to embrace harsh realities of the ongoing, coronavirus. We know that. That has caused irreparable, challenges with COVID. Okay. All right. So I'm going to skip to the third paragraph, right?
Well, before you do that, it does say that despite the ongoing challenges, they've successfully diversified their product offerings by launching a totally new line of products targeting the orthopedic and joint rehabilitation segment. That's important.
Okay, that's cool. Yes. All right. And that would have fit their mission and vision that they would have stated earlier.
Product development.
Yes.
Correct.
Cool. All right. So it says, despite the challenges faced during COVID-19, Indies recorded a 5% increase, which is 36.5 million in gross revenues. So COVID has happened. They've done a 5% growth where most companies would have actually gone down. Right. So we actually saw when we were reviewing with Cinco, their revenues were down by 6%. Not that you're comparing Indies to a Cinco, but I'm just saying the point is companies typically within a pandemic don't see an increase in revenue, but they're in the line of business that would see increase based on the fact that it's pharmaceuticals. All right, so that's good to note. All right, so this let me see what it's saying here. Gross revenues from 725 to 765. So that's what they would have done this year. They recorded a sizable surge in net profits, right? So we're definitely interested in that. So net profits, 57.7% jump. That is pretty good when compared to 2019. And the comprehensive income has increased 104%. So that sounds like they had a good year, right? So the key thing with that though, we want to see how they would have done over the past couple of years. So, but first, this would be a good sign, right? This would be good to see. All right, so our approach to business in tandem with the previous year forecast was to invest in R&D. They've said that multiple times, so that's good. And their focus is long-term growth and profits. So usually when a company says this, it means that they are going to focus their business on long-term growth and profits, which typically means they may suit a long-term investor, right? So if a company is saying they're focusing on long-term growth and profits, it means it may not move in the way that you'd want to see it for the short term, but long-term, it may be a more suitable company, right? So the company made a very bold move and raised 805 million from the market. 50% of those proceeds allowed the company to acquire real estate. So what this is saying, they did a bond for 805 million to acquire real estate in Montego Bay. So you're likely to see the impact of that in the financials as well. All right. Okay, we're poised for stable growth. That's good to see, based on the opportunities created by COVID. So what they're saying is that COVID would have provided an opportunity for them to grow, right?
Yes, and I think you would have skipped a line that indicates that they have 2 drugs under development right now.
Where is that?
Scroll up. There we are. It says the balance of the proceeds was allocated towards our long-term growth plans, development and approval process of 2 abbreviated new drugs at the US FDA. The goal is to commercialize the 2 drugs on the US market. So that's important too, by 2023.
Okay, so that is speaking to new products coming on stream, an additional market.
Yeah.
So those are good things to say. So if you're looking for this for long term, in 2 years, you're gonna have, new streams of revenue coming in, assuming that they finish the development of the product in time and release it to the market as well. All right. Strategic. 2020 being a stormy year, I think I want to go straight to the financials now.
All right. No.
All right, because I think, so typically what we want to do is so again, for those who are just joining us, we're doing a quick review, right? So this is the first time we're looking at Indies. We don't know anything about the company and we're trying to decide whether or not it's worth investing in. All right. All right, so this is how they perform. So we saw, so this is their balance sheet essentially, right? We're seeing assets, liabilities, shareholders' equity. So what you want to look for here is growth over time, right? So start when from 2016, they would have had 504 million in assets. Now, 5 years later, they have 1.7 billion in assets. That's very good.
Yeah.
Usually with an increase in assets, you expect an increase in liabilities. They started at 239 million. Now they're at 995. The key thing here, though, is that, the liabilities aren't greater than the assets, right? And I guess they can't be because assets equal liabilities plus shareholders' equity. But either way, assets are growing at a reasonable pace, which is good. There was a massive jump between 2019 and 2020. We're likely to see. I wonder if that is the property that they would have bought.
Likely.
The 805 million. Okay, that's probably it, right? And then shareholders' equity would have been increasing steadily from 2018, and income. So if you look at 2016, they had negative income of 74 million. The following year, they did almost, they completely erased that and went to 140. That's a good sign. They took a dip in 2018, and then they've been growing since then. So 2020 was a great year. The company is heading in the right direction based on what we're seeing here.
Yeah.
EPS is earning per stock unit. This is pretty much just saying, based on how many shares are available, how much money is the company generating per available share. And we saw that they had, I think, 1.3 billion or something like that shares available. So for each share, it's earning 16 cents as of 2020, right? That's how you interpret that information. Then we're seeing that same info in terms of graphical. So if you see the assets compared to the liabilities, that's crazy, right? Mm-hmm. So revenues grew by 30%. We know that already. All right, so this looks like the income statement. All right. So this is where we look at how the company would have, how what's the cost of acquiring the revenue, right? So we typically want to look at the very last year, but see where it has been trending. So revenues started at 587 in 2016. Now it's at 765. It's been growing consistently each year. So that seems to be maybe about, it said 5%. That looks, roughly about what you would have done from 2019 to 2020. Their cost of sales has been more or less consistent in terms of the range. We would have to calculate that margin, of course, the operating margin to see. Gross profit last year was really good. Anything stands out for you?
Just that, how my brain works.
Okay, tell me what you see.
Actually, what I'm thinking about is the fact that it would be great to have this in Excel. Mm-hmm. So, putting this in Excel and applying the formula to it, so that it will automatically give you some results, would be helpful for me. So that's probably the approach I would take, as opposed to reading it line by line.
Okay. All right. So you want us to...
I think you should continue, though, because...
So what we were going to do is pretty much go through the ratios as well, right? So we're going to just look at the numbers, see anything that stands out to us. Then we plug in the ratios and see, what they're saying. All right?
Yes.
So I think my wife may need to step away for a second because our son is just screaming for some attention there, right? So let's do that. Okay, guys, sorry about that. That's just how it is, right? Okay, so let us continue. So we're looking at no profits from operation that has been steadily going up as well. So 5 years ago it was 123. Last year it was 213. That's a good sign. I'm seeing Xavier saying, so yeah, we're definitely going to be looking for industry information. We want to see, what news reports might have come out that could impact their industry. So we're going to be doing some searches there. So we want to see what that says. All right. So we're looking at net profit. That's a key number that we look at. So net profit would have been growing as well. It went from 110 to 172, 138, 127, and now all the way up to 208. So the 208 that they would have realized last year would have been the best it's been in the last 5 years, which again is good. So once we plug these numbers into the ratios, we'll be able to understand, we can then now use that as a basis to maybe compare it to other businesses in the same industry and that kind of thing. All right. So let's go further. And the total comprehensive income would have been the year before 136. Last year it was 278. So I mean, it's pretty clear that they've had a very, very good year as at the end of this financial year. All right. So let's scroll further. Okay, awesome. So what we had done, we were preparing to go through. Yes, Orville, our son seemed like he definitely wanted to join the session. I mean, he was completely quiet for the last 2 hours, and then I guess once he realized we're live, then he just decided to take over the show. Yeah. So let's see what the ratio says. So it's perfect that they have the ratios plugged in here because we had actually prepared an Excel sheet to kind of capture the numbers. So this was what we're going to do. Let me just show you guys here. What we were going to do is just try to plug in the data, see what it says, but you're seeing it here, which is good. So what they're doing here is showing you a trend, right? So they're showing you that their debt to equity ratio has gone from 0.9 to 1.58 to 0.27 to 0.11, now back up to 1.3, right? So that is giving you an understanding of the relationship between debt and equity, because so the ratios pretty much tell you what they're measuring, right? So we see the direction to which it's headed. We see where their assets would have been growing, their shareholders' equity would have been going up, and we see that their liabilities would have been how that would have been tracking as well over the past few years. So the ratio pretty much speaks to that. Their return on equity now, the return that they're getting based on the equity within the company, we see how that's trending. I remember a friend of mine saying one of the things that he looks at is return on assets. That seemed to be pretty much between 14 and 18%. And their current ratio, let me just bring this back up. The current ratio is the relationship between assets and liabilities. And we see that that's just, pretty great because their assets, far outweigh their liabilities. So all in all, that's a good sign. And then they're telling you their analysis of it here. So it says the company has maintained an acceptable debt to equity, all the years, and it was significantly down to 0.11 in 2019. However, the company's debt has moved from the debt to equity moved from 0.11 to 1.3 due to the 805 million bond. So we saw that on the very first page. So it speaks to that there. So how the company, manages these situations will reflect in what the ratios show, which is why you can't look at it just in abstract. You have to look at a trend. And these investments in real estate, in new products, would typically serve the company's purpose of long-term growth and development, which is what they stated earlier. All right. So it says it continues to grow at a rate of per dollar invested at 35%. They're alluding to the return on equity that you see right there, which is its highest since being listed, right? And we saw that there as well. The return on assets would have reduced slightly due to the acquisition of real estate. And so let us continue. All right, so the MD&A, we wanted to see what this says. And guys, as we're going through it, feel free to post your questions. I'm hoping to get to the questions very soon. Orville was probably right. We maybe can't do this in an hour. So maybe we try for another 15 to 30 minutes, but we want to do it all in one session. We're not, by the end of this session, we're going to say whether or not we think Indies is worth investing in or not. All right. Okay. All right. So during the year with the 3 quarters, the year grappled with COVID-19. It's something that we all know. And they would have experienced the surge in net profits, contrary to its performance in 2019. They were able to achieve this growth. It tells you how, by being very agile in their management of stocks and logistics and extension, right? So despite the crisis, their stringent management in place / their administrative expenses by 18.4 million. That's good. We see the headline here, gross profit is up. So it's speaking to the same numbers that we would have seen. So these are very important, highlights to kind of read through. You'll understand the history and the story of the company. So, I think it's okay for us to kind of scroll through and look for the key highlights here. Their liquidity remains strong. That's good. There's been a decrease in payables. Indie Pharma's liquidity position remains healthy. That's good. And the company has $22 of current assets for every dollar. Okay, that's good to note as well. All right, it's speaking to the earnings per share would have gone up, and coming from the 0.1 per share for the prior 12 months. So that's good. So all around it's saying that, they pretty much had a good year. They are still liquid. That is all good things that we want to see. Let me see if we want to go through this. What I want to do next. So this, so far, I can just say everything that I've seen makes me want to kind of study the company a little bit more. I'll just say that 30 minutes in, right? They had a strong year last year. It seems like it's something that I'd want to look further at. But what I wanted to know is kind of go through the different areas that we spoke about, right? So if you remember this, we said we'd look at the business model, the MD&A, the financials, the ratios. We saw that. Let's look at their last quarter now, right? We want to so that's what they did last year. Let's see how the last few months might have been trending. So let's look for their last quarter reports. Quarterly financials. So they would have released this one. This is their most recent one. So this is for April. So let's see, based on the numbers that we would have seen for the last annual report, how they would have been doing since then. All right. Okay. So this information here to the far right would have been the information that we see in the annual report, right? So that would have been the audited year ending in October 2020. So this is the information I would have just seen. And what it is now showing is from then, you're able to see the 6 months ending from then to the end of April. So we're seeing pretty much, if we compare these numbers to how they would have done in the entire year, that gives us an idea as to how well they're doing this year. All right, hopefully that makes sense, right? So they would have had revenue at this point, and within the 6 months, they're doing more than half of that. All right, that's a good sign. Gross profit is looking to be maybe about half. 25 and 25.50, so a little bit less than half. Net profit for the period, there's that. So it's showing you EPS as well, so that'd be 0.5. So this is how they would have been doing for the first 6 months of the year, right? Of their fiscal year. All right, and this is showing us the numbers for just the 3 months. So this would be April, March, February. Is that, yeah. So this is how they would have been doing in 3 months. So you look to see kind of how the quarter performance is, how the last 6 months would have been, and then what you want to do is anticipate whether or not you feel they're going to perform better than the previous year. Because if it looks like it's headed in that direction and other investors respond positively to that news, then it could mean a short-term growth in price, right? So that's the kind of information we're looking for. We want to see whether or not they're likely to perform better, if there are going to be some growth, if there are going to be things that we can say, well, okay, I want to take maybe a short-term or a long-term position. So there are two things you can look at here. You can either say, well, you're comfortable in how they look, in how revenues look, in how the gross profit looks, all those other things, and say, well, okay, I like where they're headed for the first 6 months. The next 6 months look favorable. I may take a position here, something like that. That's a question you're trying to answer. All right. So it's saying here for the 6 months ended, earned a gross revenue of 424. So we would have seen that compared to 400 the prior comparable period. So at that point in the previous year, we're seeing that they're doing $24 million better. That's a good sign. The second quarter shows a decrease of 3% from 207. Let me actually zoom in. Find it hard to read here. There we go. All right. So the second quarter shows a decrease of 3% from 207. So, okay, so we would have seen that here, right? So that's what we would have seen here. That's what it's alluding to. Gross profit for the 6 months ended on the second quarter shows a decrease of 7% and 20% respectively compared to the same period, right? This is due to the fact that the height of the pandemic, global and local safety measures led to some logistics challenges and unavoidable costs. These costs are firstly increased sea and air freight charges, which were further compounded by the urgent need to acquire by air freight some out-of-stock items. So what this is saying is that the gross profit went down, which again we can see here. So the 3 months, the previous year, we saw it at 119, and the gross profit here compared to where it was before. So pretty much it's not performing in the same way as it did the previous year. So that could actually be, it would be good to see what the 9-month report says, because that will kind of set the stage for how they will end the year, right? So I would say I would have some concerns over this in terms of that increase in cost, and that's because what that means is that if it is that they're not likely to end the year in an acceptable state, because everybody expects that the pandemic companies are not likely to perform the same, but they may want to see certain signs, certain things trending in the right direction, certain management decisions being made. Now, it's completely okay to understand that there's increased costs based on the pandemic. So let's see what the 9 months says. So that's what I would be thinking of here. I want to see what the 9 months says. All right. It's saying also that the company was impacted in terms of marketing activities. So they weren't able to market some of their products, their lower consumer disposable income, that led to a one-off writing off of expired goods. So they have goods that would have expired on them based on the fact that they weren't able to market and promote those goods, right? And again, you want to see what they would have said in the 9 months, because if they have to write off goods, if they have to throw away goods that expired, that will have a cost. Now the concern is we want to see what impact that will have. All right. Okay, so we're getting an idea that there's definitely an impact with COVID. They can't do business in the same way, increased costs due to shipping. And so, let's see what this is saying here. This is pretty much the same numbers that we would have looked at earlier. Let's look at the other stuff. So gross profit, we saw that profit from operations from the previous year to this year. We're seeing that drop there. And for the 6 months ended. So, I mean, this is maybe about 10% less in terms of profit for the 6 months. And net profit. So this number compared to that number. Yeah, so that's interesting to see there. That's a bit concerning for me. Let's see this now. Statement of financial position. So this is just showing the state of their assets and liabilities, so property, plant, and equipment, related companies, inventories. So they would have more inventory on hand here. That is, so more inventory on hand, you look at in two ways. One, they have more inventory to sell. Two, you also look at what they said about the fact that they had to write off some things. So if they have excess inventory, based on the type of products they have, that's a concern for me here, just to see how well, again, what the 9 months say, right? If they again have to write off more inventory, then it brings down this value, right? Receivables have gone down, that's fine. Tax recoverable, share capital, all of those things we can just go through. Non-current assets, liabilities. So we saw them mention this bond. So that's here. So we saw that it would have been accounted for. So that's the long-term loan that they will have to pay back. And the total equity. Okay, let's keep scrolling. They would have paid, I know they paid a dividend last year, I believe I would have seen. I haven't seen any report of it for this year, or it's not reflecting here. Other comprehensive income, net profit for the period, retained earnings, okay. Okay, all right, so they're just showing the details of the same numbers we would have seen earlier. Okay, let's see what they're saying here. So trade receivables here would have been a positive figure as opposed to a negative the year before. And the inventory is actually showing negative here as opposed to the year before. Trade payables, related company. So for example, when you see information like related company, there should be some details or information about that. Okay. All right. 1 second, guys. Hello, I just realized that I am muted. Great. All right. So what I was pretty much gonna say is that my main concerns coming out of this report would be the items they had to write off. The let me show you what would have stood out for me. I want to see the 9-month report. So I want to see how well they do over 9 months, because I mean, sometimes some expenses are the impact maybe for a quarter, you know, adjustments are made, maybe there's a boost in revenue, because we want to see the 9 months to understand how they're going to perform based on how they ended the previous year. What I am anticipating just from what I've looked at is that they may do slightly less than what they did the year before. That is my anticipation. I don't know if I'll be right or wrong. Nobody knows the future, right? So, and I would be concerned about the items that they had to write off. That would be concerning. Yeah, so those are the main things that stand out for me. Renee just got back. She wasn't here, so I don't think you'd have anything to comment on this part.
No.
All right, so what's the next thing that we're going to do? Should have gone through the last quarter. So let's talk about kind of industry and landscape for Indies now, right? So based on what they do, what do you think of the landscape? Who would you view as a competitor for Indies or within the same space? What other pharmaceutical company?
Pharmaceutical distributors and manufacturers.
Mm-hmm.
I would have to research that.
Yeah. So what I'm going to do, if I'm not sure who is in the same industry as a company, I go to the VM Wealth report, because what they do is they issue a report based on the industry, right? So I'm going to look to see what companies they list in the same industry as Indies, right? So that's what I'm looking for here. You found it yet?
That makes a lot of sense.
Yeah.
No, I have not seen Indies yet.
So Greg gave us the answer, but
There
let's see if we can find it out, right?
It's retail.
So it's listed under retail, right? So the interesting thing here is, though, I would consider them to be under medical, right? That's what I would have said, but they're listed under retail, I guess, because they're doing
distribution.
Okay.
So which is what Greg said. He said last D.
Yeah.
Right. The other company that came to mind for me when I hear pharmacy, I think Fontana. Like I
thought about Fontana as well.
But I don't think of Fontana as a manufacturer. They're not a manufacturer. Mm-hmm. They do retail.
I was gonna say Indies doesn't manufacture. They seem to have products here. They invest in products. So they both distribute and they distribute and make their own, right?
Okay.
Yeah, so Greg is saying Fontana to an extent. So yeah, I mean, Fontana pharmacy persons know that. Mm-hmm. So what I would do here, so based on how they're grouped by VM, we can look and see what we're trying to do here is look at the main thing that I want to see here is this information, this section here in terms of comparison. So let's see which one is Indies. So Indies is this one here. So Indies PE compared to the industry is 25, right? The industry average is 23. Hopefully you guys can see this. Let me zoom in a little bit more. Am I at the right place?
Yes.
This is it. Yes, so the PE is 25, industry average is 23. Now, you can't just use the PE, but the PE is one of the things persons look at to see whether or not a company is overvalued or undervalued, right? So if the industry average is 23 and they are at 25, then you may see some reports or some analysts saying their PE is trading higher than industry average. And so they may have, let's see what VM actually said about them.
It's underweight.
So VM says they're underweight, and let's see what they say underweight means. All right, they have it on the last page. So underweight, the security is deemed to be overvalued and is expected to underperform compared to the average market return and or return of comparable securities in the same sector, with at least 10% downside anticipated. That's what they're saying about indies based on, I'm guessing, the PE. I don't even think it's based on anything else. Which page are we on?
Yes, among the other factors as well.
Mm-hmm.
So we're looking for the retail.
We're looking for retail, yeah. I feel like I never scroll that far. Okay, that's back to the top. Yeah, this is what happens when you're doing things live, right?
So fast.
Yeah.
Okay, so Greg is saying MDS as well, that they recently got into the pharmacy business, and MDS
is here. All right, cool. So based on what Greg is saying, let's look and see how MDS compares.
Wow, 65.
So Greg, how do you explain MDS's PE of 65? Like I think one time I was looking at I think Burgess PE is like 58. Like what do persons make of such a IP such a IP? Because I mean, yeah, anyway, so that's, and their price to book would have been 6.4. Their EPS is 16 and the book value per share. All right, so what I would do here, okay, illiquidity, tight held stock. There you go. All right. So what we would do here, usually in this part, is that we're looking at how the company, if the company is grouped in retail, then what you may want to do, you look at the PE. You may want to look at how other companies are kind of, so if everyone is kind of hovering around, let's say about, a few of them are actually above 20, which means I'm not going to overreact to the 25.
Right.
All right. We have the MDS that's 65. We have one that is 14. Let's see which one that was. That's the third one. That's actually last D. So if I'm going through this report, I may want to take a further look at last D and see what last D is doing. Because if last D is considered, it's saying market weight. So it's not overweight, meaning they don't view it as undervalued. No, so I'm saying it's as referring to overweight, because if Indies is underweight, then a favorable stock would be considered
overweight.
Yeah.
Or market weight.
Right. So I may want to use this report and maybe look at the companies that VM would say. So I may want to look at Fesco. And I mean, I would not think Fesco would be in the same. I don't know if I would want to compare Fesco with Indies.
No, we wouldn't. So for the purpose of this analysis that we would be doing, we would stick with those with the Fontanas and the MDS and these for the comparison based on the industry. So there's business type and there's industry. So when it comes to industry, we're talking about pharmaceuticals. So we would want to stick with that.
Okay, fair enough. Yes, because I mean, and it's something that I think Simon from Socks on the Rock said. He likes to compare companies that he likes to compare apples to apples.
Right.
And I think that's how you should compare. Agreed. Right. So I'll be comparing with Fontana, with Lasti, with MDS. Right. Those are the companies I'd be looking at. And I'd actually also be looking at the medical ones as well, even though maybe it wouldn't be considered.
No, I mean, I think those are different. They're offering medical services. We're talking about about.
Okay. And Indies would be mainly retail.
Products, right.
Okay, fair enough. All right, cool. Okay. All right. So let's see what else we're looking at. So, all right. So other factors really comes down to, all right. So we know that Indies, what we would have heard is that they would have needed to, they were going to have some arrangement in place to be one of the distributors for for one of the vaccines. What we
Right.
also heard is that that was delayed, right? So that's impact. That would fall under other factors. And we know, so for example, when it was first announced, there was favorable response to that news. And I think we should be able to see that. Let's go back here. Let us go back 6 months, right? So this is Indies that we're looking at. We saw Indies go at the end of March as high as $4.57. And you can't see it here, so let me zoom in. All right, so it would have gone as high as $4.57. My guess is, I'd have to confirm, but that was when, so if I saw this for the very first time, I'd be looking at news articles around this period, well, usually before or shortly after, to see what would have triggered this, right? So I'm guessing that this was the news about the vaccine. And my guess is after it was maybe announced that there was some delay or something, then it started to go down or something like that. The news can confirm that, right? So that's where it was. So it's down 457. That seems like maybe about 15-20% from that high. So I mean, based on what I'm seeing here, as I would have said, the concerns I have from the 6-month report is the management of the costs. I'm not sure how their end of year is going to look. I'd need to see the 9 months. And I mean, clearly, if they are able, so one thing that could happen here that would be favorable for them is news of the vaccines. Maybe if that situation is resolved,
right.
If there's any other positive news, if any new products come on stream, which is not likely because I said 2023. So it would have to be some positive news, mainly around vaccine or some medication or some new sale or something like that.
Or even the property that they purchased.
What about the property?
The possible developments with that. We don't know what that.
Well, yeah. So let me go back to. Let me stop sharing for a second. So I'm thinking that because so what we see in terms of how the market sometimes responds to news. So news, one of the things that drives prices for stocks, right? I mean, earnings drive it. You know how companies, how investors feel about the company, sentiment, etc. So in this case, for them, for Indies, things that would drive or impact their price, things related to the vaccine, any new deals or partnerships. As you said, maybe with that property, maybe if there's news about some development happening there, some new distribution facilities, something. So we'd have to try to see, maybe read further as to how they planned to use the land.
Right. So I think the rest of it is not something that you can do in the 45-minute.
Well, so we're at the hour mark. But the thing is, the interesting thing is, I've seen enough where I think personally, if I'm a shareholder,
yes,
before I sell or buy more, I want to see the 9-month report.
Okay.
So that's me. I kind of want to see how the 9 months look. Then I would see whether or not I'd want to know the type of end of year that we're preparing for. If there's any major news, I mean, so those are the things I would want to see. Because of things like where the PE being where it is, maybe the price, it's not really a great discount from the high that it was. So there are things like that I'm kind of thinking about, but that's for me. What's anything that you would want to say or hear to say whether or not you would buy the company?
I mean, from me, as I said, less about the ratios and more about the softer things, right?
Okay, so you like the company?
So I would say that based on our current environment, what is going on, the emphasis on healthcare, the emphasis on the medical field or the pharmaceutical field, it would be wise to have some to have some interest.
Okay. So it's looking at the landscape and saying that pharmaceuticals is an interesting company to have because of COVID being around for a while and healthcare in general being something that is of need. Okay. All right.
Right, because medicine will always be needed.
Yeah. And I mean that seem to have a strong asset base. They had a really good 2020. So let's say that COVID and the impact is fixed in a year, maybe two, then they're likely to pick up that momentum for where they were in 2020.
Them having a good 2020 also speaks to their management.
Yes.
It speaks to the approach that they're taking as a company, and it speaks well about that. And then I'm also looking at what is their vision, what is their mission, do their values seem sound?
Okay, so you like that stuff.
I do.
Those are the things that she looks at, guys. Like, boy.
Those things matter to me. So
that's how Renee picks companies. She doesn't even want to know how they perform. Does she like them? Are they a likable company? Those are the things you look at.
It's not just that. It does matter how they perform. It does matter what their bottom line looks like. But at the same time, it's not only the bottom line for me.
Which is fair, because I guess there are some things that the bottom line won't always show.
Absolutely.
Okay.
And it's kind of difficult to quantify. And I know that in some financial statements they may try to do it, quantify goodwill or quantify the brand itself. But it's difficult to do that. And what is it that the company is offering outside of a profit?
And I mean, to me, I know that we spoke about Fontana, we spoke about Lastly. I actually see Indies as a unique company in terms of what meaning. Isn't it the only one that we saw dedicated to pharmaceutical distribution and selling?
Fair enough.
Right?
Fair enough. Okay,
so I mean, so what's the vote? We're gonna
we're not giving any financial advice.
No. So the point of the session was to see whether or not this is a company we would shortlist.
Well, then yes, the answer to whether we would shortlist is yes.
Okay, cool.
And we would research further into the company and continue monitoring the news, etc.
Yeah. All right, cool. So that's it. We ended the session at 63 minutes. We scrambled some. Baby went crazy for a couple of minutes there. Guys, this is the very first of its type. Let us know your feedback though. Was this helpful? Did we rush through it? Which areas would you want us to spend more time on?
Yeah, let us hear.
And let us know which companies. Let us know in the comments below the video, not in the chat. The comments below which stock you'd want us to look at for the next one. Because I think we want to do this in a couple of times and say.
I see Orville is asking for it once per month.
Well, I was actually thinking, you know what? It's Orville, so I'll say, okay, Orville, we can do once per month, because that's Orville being reasonable. I'll work with that. Okay. All right. So that's it. So next week, Tuesday, we have a session with Andre from L.E.A.R.N tomorrow. So that should be an interesting session on estate planning. So please do join us for that one. So should we just leave that? So we'll close the poll for today and then just reopen it for the next one. So
well, yeah, guys, I kind of like the slider, right? I kind of like the poll at the start, so it's a little more interactive. But as Jermaine said, let us know in the comments.
All right, so we'll see you in the next one, guys.
Bless you guys.